Well, all right, everybody. Welcome to something I've been wanting to do for a while. This is the Forex Market Preview Live. And we're going to be taking this out as the market goes live here and talking a little bit about some of the major pairs and what I've been kind of watching and just basically do a little bit of technical analysis for you live. This is a good precursor to what's going to be happening in September, which is the 2011 Pro Trader Boot Camp, which is a 2-week, 100% absolutely free, at no cost to you, 2-week training that we do. And this is if you like this and you like kind of the way that we do this, just imagine 2 weeks of this of live training and education and trading that we do in the live room which you're in right now. And we got about 200 people in here right now. Normally, when we hold this event, there are 2,000 to 3,000 people who attend every single week. And guys, this is absolutely the biggest online trading event there is. That nobody else does what we do when we go out and we do this 2 weeks of training, and the entire mission, the goal behind it is to empower you guys, to teach you guys some education, to show you guys what I do, and how I work with traders, and then give you, of course, the opportunity to engage if you would like to. So be on the lookout for that as we go. And the rest of you, to answer a couple of questions that always come up. This is an eSignal platform. It's eSignal 11. I have made some modifications on it here on the background and things like that to make it easier for you guys to see. Before we get started, hard to hear audio. Is anybody else having audio problems at all? Try your microphone on your end. I may be able to do something on my end. All perfect, fine. All right, no issues. Well, let me adjust. We'll get a little bit of noise out of there. I'll adjust it just a hair, and we'll see if that does any better. But I want to take you through the markets today. We've got some things that I've been working on here and kind of looking at it. What I try and do with this Forex market preview is just to take a few of the majors and on occasion some obscure pairs and talk with you a little bit about what's happening and where that market is likely to go. But what we're going to do is confine ourselves really to some of the USD pairs. Into next week, we have a lot of things on a fundamental level. Not only in the EU is kind of stabilizing now, which means that we may be in a fairly anti-dollar position next week, depending on what happens with the U.S. debt ceiling that has yet to be raised. And if the U.S. market doesn't come to some sort of debt conclusion, some sort of plan by Monday or Tuesday, they're not going to be able to get it passed by the 2nd. But after that, then we're going to have to see what the market decides to do. So there are a lot of not necessarily fundamental, what you would call fundamental, but rather government decisions that will be made that will affect the markets. The markets have not been acting fundamentally very much lately. They've been reactive to news. Traders have been driving the market. And they've been reactive to news events and to government intervention, not to actual fundamentals. Had the market been playing off fundamentals, this Greek fiasco would not have turned out the way it did, because Greece basically defaulted on its debt, the way they've structured the new Greece debt program. Now, if you don't understand all that, I'm not going to get into it, but I just do want to explain that, hey, traders are driving the market. And so if you don't understand trading and you're involved in the currency markets, you're in a bit of a pickle. Because if you're trying to do some things based off some fundamental analysis and what you're seeing out there in the market, it's not impossible. Like I tell traders, it's not impossible for you to do that, but it is very, very difficult for you to come away on the right side of the market, because not only do you have to judge where the market is going fundamentally, but you also have to judge the timing. And with traders playing such a heavy influence in the currency markets and things like flash trading and quantitative trading in the U.S. futures and equities markets, it's becoming more and more difficult as a quote-unquote investor or position trader to be on the right side of the market, because there are such heavy swings back and forth. But let's have a look here first at the euro dollar. Now, I'm going to go ahead and kind of collapse things up here. If I scroll back here, you're going to see that originally we were looking for a bat pattern that didn't complete, and the market ended up rolling over, and what we got was another impulse leg. That impulse leg, high to low here. And this impulse leg breaking structure to the downside, that's how we know that we had an impulse leg there, is that we had a break of even the most recent structure here. Break of this structure gives us the new impulse leg. And then we had a pullback. And that pullback fell short of a 618 retracement right here. And then we had about a 382-ish one here, or 618 one retracement here. So that gives us kind of our setup here. And what I was looking for was a projection up into an 886. I'm going to draw in my Fibonacci retracement here. And guys, if you don't understand all of this, again, it's not, you shouldn't expect to understand it after a 15-minute conversation. One of the things I'm going to do in advance of this program that I'm running next month is I'm going to be talking a little bit about the books that I've read and the education that I've done, so that those of you who want to go out and read the same books and get involved in the same things will have the ability to do that. But what I'm telling you is this: there is a lot of information here and a lot that goes into recognizing this structure. And what I was looking for here was a press up into this 886 area, this 886 zone. And that would have completed a a bat pattern that I was watching. And this was one that I actually put out to my traders, the traders who follow me, as a trade last week. And the market fell short of that. What ended up happening was we consolidated short of the area I wanted to be in. We ended up consolidating right here. Now, any time that the market consolidates like that near where your reversal area is, that's a bad sign. It means one of two things. Either the market's going to roll over short of your area, which is what happened here, or the market is reloading. It's getting ready for another pop. And so either way, this turned out to be a not great situation, and now the market has pulled back a little bit. So here on the euro, what is the expectation? Well, overall, if we take a look at this, and I've got to kind of consult my chart down, I hope you guys can see this. It's easier for me to see it in black, but I keep getting requests that I do it in white because it's easier. If we look at the overall market is bearish. We see that the market continues to make a lower high, and now a lower high. But over the past several days on this 4-hour chart, we have a bullish sentiment to the market. Now, overall, the market being bearish, we want to still maintain a bearish bias, which means that there is an opportunity for a trade here. And I'm going to drop down to a 60-minute chart. And when I do that, what you're going to notice is a beautiful double top right here. Can everybody see this? Anybody recognize the double top that occurred here? Say yes if you can see it. Sorry, guys. I was reading through some stuff. If you're sending me private messages, I'm not reading them. Just so you guys know, I got too many things going on over here. Okay, perfect. Well, the double top occurs, and we get a break of structure. Now, there is a trade that's what I call a 2618 trade, where the market rallies, and then we pull back into around a 618 retracement, and we'll look for a sell around the 618 retracement. Now, what do you notice here about, again, just talking about structure? So much can be gleaned from just understanding, a basic understanding of structure. But if we look at the 618 retracement that occurs here, boom, right there around 43.94. Look just below that at 43.86. Look at this support level. The support of your double top, the support level that comes in there, we're broken. Then the market comes and we look like we could potentially rally. Where's going to be a good spot that market's going to find that resistance? Well, the highest likelihood place, if we know that the overall market is bearish and we're looking for an area to get short, will be in the near term, this area right in here. Now, we don't know exactly where this market's going to turn. That's why you have to write in your rules of engagement and your rules for entering and exiting the market some additional filters. And I'm not going to get into those tonight because we've got a lot to cover here. But what I do want to point you out to is the fact that if I take an AB equals CD here, oops, excuse me. You're going to see that market comes right up into that 786. We may have to go down, we have to drop down to a 15-minute chart so you can see that. But if we take our initial leg here and then we copy and paste it up here, what you're going to see is the ABCD move comes right up into that zone. That's 786, previous structure support, now should become resistance if the market pops. Now again, going back out to the 60-minute chart, this is all dependent on this market actually rallying here, and we don't know whether it'll do that. But if it does, there's going to be a potential area for market reversal right here where we're seeing. And this is basically, if you think about this logically, traders, what it means is the market has driven up, it's put in a double top, the market has broken structure to the downside, signaling to everybody that its intention is to go lower. However, there's probably not the selling pressure now that the market has driven lower to sustain without rallying back up into an area where sellers may come back into the market. Now, everybody is going to be watching the same area here. They're going to be watching this area here, and they're also going to be watching this top line area around where the market found resistance before. So there are a couple of choices here, a couple of areas on the euro where if your sentiment is bearish, that you can look to get short. And so as I go into the trading week, this is some of the stuff that I'm going to be watching. Now again, I have to throw out my little disclaimer to all of you guys. What we do here is for educational purposes only, and nothing here is meant as a engagement to trade. I'm not telling you to trade. I'm not suggesting that you trade. I'm just telling you kind of what I'm looking at and what I'm watching, and then hopefully that will help you begin to identify some of these same things. Fair enough? Say yes. Let's go out to Canada. Take a look at Canada. Go out to a 4-hour chart here. Now, again, Canada, if we take a look at the overall sentiment of the market, look at what we've got. Very much bearish. No matter how we look at this, the market is showing significant bearishness, right? And the expectation here is that, hey, we may continue lower. If I go back out, even if I go out to a daily chart here, let me find my daily. Good grief. Let's just take a look at it on the daily. Look at that on the daily chart. Just how straight down it is, and we come right back down into this little support level here, and we actually breach that support level. So all indications here is that this market just wants to continue lower. We continually see Canadian strength. Now, that doesn't mean that we might not see a rally out of this. Now, if we're bearish and we want our market to be bearish, then we have no play here because we need to see these lows down here violated. And once these lows down here get violated, then we can take a look at as a potential short opportunity as the market comes back up in to test those. Right now, the market has based, and the only opportunity that you may have is a counter trend long opportunity. Dropping down to the 60-minute, what we've got is several tests here of this zone. And a move back down into this zone could potentially present an opportunity to get long, because look at what we have here. Looking at this on the hourly, we had a move where the market continued to make lower highs, then we had a base, then we had a breakout to the upside. Now the only thing that may happen here as this market breaks out is that we may get lucky enough to come down in, grab a retest before the market rallies again. But that is the only option here on Canada that I see, and it's really not a very good trading opportunity. I show it to you only because this is a counter trend type of opportunity, and the market is based here. It's broken out. If it gives you a chance to get on board that rally, you may get on board of the very lowest low in the market if it gives you that opportunity. But we'll have to wait and see. Moving over to Australia, back out on the 4-hour. Australia broke. Let me delete some of this stuff off of my chart. This is some training I did last week. If we look at Australia, we look at these triple tops that came in, right? And there were actually a couple of opportunities that we had to get involved in this, and the market ended up rolling over. And right here on this candle, we broke structure to the upside. Everybody following me on that? See how we had this nice resistance level? That resistance level was violated, and now we're above that resistance level. Well, what the market has done now, this market should break to the downside. And actually, it looks like it already is. This market should break to the downside because of this pattern, this formation that's occurring here. The market has, basically channeled up here slowly but surely, and it should break to the downside. Now, what do we know about structure? Where's our play here? Well, the market has broken significant resistance. Going out to the daily chart now. Going out to the daily chart, next stop. We're now right here, right there, at this level. The next stop is all the way up here. Boom. 109.74. We're at 108.59. What should happen here is the market should come back down in. We're probably not going to get trend line support, but the market should come back in, back out on the 4-hour now. Should pull back down into previous structure support. That will give you an opportunity, guys, to get long for a continuation move all the way up to 109.74. Now this could be a really, really nice opportunity. Now, if the market never comes back down in to retest that, well, now you know that the absolute highs, back out on the daily chart again, are here. And you can be looking at that 109.80s, 110 area for a potential last-ditch shorting opportunity. But as you can see, this market has done nothing but went on a tirade to the long side. And I, for one, don't really like being short a market that does nothing but attain new structure highs. There are very few opportunities in this bullish trend that's happened in the Aussie where it presented any significant areas where you could make money to the short side on a swing trade basis. So be watching for the pullback on the 4-hour now again. Be watching for that pullback coming back down into those 107.70s. For an opportunity to get long. Let's take a look at the pound. Consolidating. Now, the pound is consolidating the same way that the euro was consolidating. It looks like it's set for a pop. You can see the range here that the pound has been consolidating in. This looks like it's recharging for another run higher. We also are short of an ABCD pattern completion here. Boom. We should come up into this 164.50s area. Let's go ahead and look left, see what kind of structure we have at 164.50. Or, sorry, 164.20s. Oh, what do you know? How about that? Look at this zone right in here. Let me go ahead and wrap this this area here. From about 164.15 to 164.60. We have a zone where we've had 1, 2, 3, 4 tests. We've got some support back in here. So a very nice area here where the market, and look at that. Look at how the market comes right up into there. Just mark that zone out. Potential reversal zone, as Carney would call it. Now, if we go ahead and draw in a little bit of Fibonacci, let me just do some Fibonacci work here. Fibonacci extension, swing low to swing high. It's trying to hook, whatever, something like that. 127 extension, Fibonacci extension, swing low to swing high. Got a 618 in there as well. Let me see if I can darken up that 618 for you. There you go. So what we've got, guys, here is a potential AB equals CD up into a 127-1618 ratio confluence at structure looking left. And actually, if we drag our Fibonacci retracement from the entire leg of this move, bring in our 886, You're going to see that 886 coming in right inside that cluster area. So guys, this is the place. This is what we're watching now on the pound. If you're looking for an area where the pound is likely to find some resistance, that's where it's going to be. That's the next level. 164.13 to 164.64. Now in this case, we're seeing the market break out here. So is there a chance to get on board as this market breaks out? Yeah, but what you're going to want to do is be patient. You're going to want to wait, dropping down to the 60-minute chart now. What you're going to want to do is wait for the market to break out to the upside. Okay, because here's your high session. You want to see it break out, and you want to see it come back in. Once it comes back into that 63.30s area, that's going to present you your opportunity to get long. And then you're going to look for it to run up. So guys, this is what separates, guys, I think, good traders from bad traders, traders who are successful long term and those who are not, is that good traders are patient. Good traders are not trying to figure out where do I hop on board so the market can rally here. Good traders are saying, okay, the market has confirmed it wants to go higher. Let me see if the market will pull back into an area where I can look to get long. Does that make sense? Say yes if that makes sense to you. Or is that utter nonsense? Am I way off the mark here? Okay, good. Good traders will always look for the market to make its move and then make its decision based on that. We do a lot of, I teach a lot of advanced pattern recognition. So I teach a lot of Gartley patterns and butterfly patterns and bat patterns and things like that. And all those patterns are designed to find areas of market termination. Where are the markets likely to reverse? And I had a guy who sent me an email not long ago after I put out a trade that I was watching, and I said, hey, this is where I'm looking to short the market. This is where my limit orders are placed. This is where my stops are placed. This is where I intend to take my targets off. But the market hadn't yet reached that level. And I had an email from a trader who said, hey, can I just buy them here and expecting the market to go up? And I said, no. I said, you can't do that. You can't buy before the market confirms that it's going to move there. So I don't know that the market's going to go to the point that I'm looking to sell. I don't know if the market's going to get there or not. All I know is that if the market does get there, that there's a high likelihood that the market is going to shift directions at that point. Does that make sense when I talk about it that way? Just because you're looking to short the market up here at 1618 doesn't mean we instantly buy, because we don't know that the market's going to go there. We just know that if the market does go there, that there's a high likelihood that it's going to find that resistance and pull off of it. Okay? If it doesn't get up there, well, now we have to shift our thought process, because what's going to happen is we're going to break structure to the downside, and now we're going to be looking for some alternate trading opportunities. This is predictive analysis. I call it staying inside the market's OODA loop, staying inside the market's thought process. You have to be able to stay one step ahead. And the way you do that is by envisioning multiple scenarios in which there can be different outcomes, and then determining how you're going to trade based on the outcome that occurs. If you do that, and if you follow that line of thought process, then what's going to happen is that you're always going to be in a position to take advantage of the market no matter what it decides to do. Fair enough? Say yes. Say yeah. All right. Well, we're running about 20 minutes here. We'll look at one more. Go grab pound yen. Out to the 4 hour. I like to do things on the 4 hour because it presents a long enough trading time frame that traders can look at it. We have our impulse leg. What identifies our impulse leg? Look left. Previous structure was broken. This is what's really interesting, is look at this structure level. You actually kind of have a structure level right in here somewhere. That's kind of where the bottom came in at. Look at where the market came back up into test. Almost right up into it. Didn't quite get there, but it came right up into that zone. It wanted to check that zone. We bring in our Fibonacci retracement, and what you're going to find is it's about a 50%. I'm going to bring in, let me line up my 50% here. And you can see the 50% coming in here in purple. Right along that 50% line is where we came in. And then we get another pullback to about a 382 retracement. Now, one of the things that I teach my traders, and that is common, is you can put this into your toolbox, is anytime we get a 382 retracement, and then the market rallies off that 382, there is a high probability that the market is going higher. This is what I refer to as a Fibonacci failure pattern. It is a pattern in which the market goes into the 382 but no deeper. And in that instance, there's a high probability that the market is going to come up and at least hit a 127 extension. Now, in this case, what I want to pay attention to is my AB equals CD pattern, which is going to drive me up into almost a 1618 extension. If I bring in my 886 again, looking for ratio confluence, I find it right there near the 1618. Now look left. What do we have right here? Right near that 886, right near that ABCD pattern completion, we have structure. This is going to be, if the pound yen decides to rally here, if this 382 holds and we rally higher, this is going to be an area where there is a potential market reversal. And those of you who are students of technical analysis will in fact notice the AB equals CD, the head and shoulders pattern that exists here. Head and shoulders pattern broken, we'd be coming right back up into that shoulder to retest. Everybody following? Now, if the market breaks down here below this level, then we've got to rethink our process. But until one of those two things happen, we're in a holding pattern. This is not a trading opportunity here. At least not as a swing trader. Now, intraday there will be opportunities throughout the day to make money. But from a swing trading basis, we look at this chart and we say, okay, the only thing I need to do, and you guys can set alerts on your platforms. Almost every platform has an alert system. And what I like to do is just say, hey, if I'm watching this level around here, about the 786, 129.56, I want it to send me an alert. I want it to remind me, hey, dummy, you were analyzing a chart, and you said this was an area that you wanted to watch. So that if I'm doing something else, or I'm involved with something else, or I get preoccupied, I forget about the chart, I erase my analysis, I at least know that, hey, there was something important here I was watching. And so then I can go back to the chart and say, oh, yeah, okay, I want to be looking at taking a short position here. So that's going to cover what we've got here for today's Forex market preview. I will do a quick Q&A for any of you who might have some questions, although I'm not going to get too in-depth because I imagine that a lot of the questions are going to be geared more towards specifics around trading strategy and things like that, and that's really not something that the Forex market preview is designed to do, but I do want to leave a little bit of time for you guys to ask some questions. Yes, this will be archived later. I will put this this will go out on the Trading Underground and some of those places too. Sure can. Do I trade crab patterns? I do not. Crab patterns, by definition, the way I look at them, are broken Gartley patterns, and so if my Gartley pattern is broken, I will not trade the crab. Is that 382 retracement failure pattern only after an impulse leg? No, it's not. Are you considering your debt crisis in any of your analysis this week? I'm always looking at the market. I'm always looking at the fundamentals in the market, but I don't base any of my trading decisions off of fundamental analysis for the reasons I stated earlier today. Butterflies Nuno are not failed Gartley patterns the way I trade them. I trade them using specific ratios, and there is a distinct difference between a butterfly and a Gartley pattern. Have I named the book yet? Real quick, those of you who are wondering, I am much to my I don't know. I don't know if anybody's ever going to read it, but I am writing a book at the request of several of my former clients and people who are interested in knowing more about kind of how I got into this. I think the book's working title is A Road Less Traveled. and it's basically going to be a story of how I kind of got into trading. I get tired of reading books on technical analysis and specific strategy and garbage like that. What I really like reading about is how traders got where they are. How does a trader go from not making any money to making money? How does that transition happen? Um, and I just wanted to kind of tell. I have kind of an interesting story. My life was spent in the military first, and then as basically a soldier for hire in places like Iraq and Afghanistan. And how a guy with no college education and no marketable skill set ends up in front of you tonight, in front of 300 people, talking about Fibonacci and ratio analysis is a bit of an interesting story. And so I thought I would tell that, and in doing so, teach some strategies about trading. How do you decide which time frame you're going to trade, and how do you avoid conflict between different time frames? Good question, Mats. I trade off of I break it down into two different sections. I have the trading time frame, which is the time frame I look at to actually take trades, and then I have a higher time frame. So if you're looking at, and I will take trades on a 4-hour and an hourly chart for swing trades. So if I'm looking at to take a trade on an hourly or identify a potential trade on an hourly, I will use a 4-hour chart as a higher time frame. And then of course if I'm trading off a 4-hour chart, you will see me use the daily chart as my higher time frame. And you saw that even tonight when we bounced around. I bounced from 4-hour to daily, and from 60-minute to 4-hour. All right. Euro did not make the Gartley, but consolidated just under that level. Would you have taken it if you had seen that at the time? I did see it at the time, Darren. That's why I actually canceled the trade that I had placed, because as I explained in the beginning of the session, that when it consolidates like that, it is typically looking to roll over, or more than likely it's kind of building momentum for another pop higher. And so I didn't want to be in the trade at that time. Either one of those was a bad situation for me. Okay, great. How do you keep yourself from staring at a trade once you set a stop loss and target? It can drive me crazy watching the price fluctuate. Jeffrey, I know exactly what you are saying. And you guys know who Ron Popeil is? Most of you in America probably don't. Ron Popeil invented the infomercial. He is a fantastic marketer. And he had this little device that roasted turkeys and made I don't know, all kinds of meats and things like that. It was this little built-in thing that sat on your kitchen tabletop. And he had this saying. The saying was, "Set it and forget it." Thank you, Chris knows it. Set it and forget it. And then he would get the whole crowd, set it and forget it. And if you're over the age of, probably 30 in America, you know the phrase, set it and forget it. And traders, that's the beautiful part about the way I trade, the way I swing trade, is it is literally a set it and forget it mantra. You place the trade, you have a stop, you have a target. And it's literally that simple. So Jeffrey, what I would tell you is that if you're having some angst, when you've got the trade on, stand up out of your chair and walk away. If you have your computer monitor up and you're at work and you don't know what to do, shut your monitor down. Just shut it down. Don't mess with it. And I guarantee you that's going to relieve a large burden from your trading day to day. Jason, I just want to say a big thank you for the market previews. They've been great. Oh, thank you, Tom. I appreciate that. All right. Do you ever trade broken trend lines? No, Robert, I don't. And that's not because broken trend lines don't work, Robert. It's just that, you can't. It is foolish to try and trade everything. The amount of knowledge and well, that sounds cheesy, but I know a great deal about a great many aspects of technical analysis. I restrict myself mainly to Fibonacci and ratio analysis, and that has worked well for me. All right. other questions about the discussion we've had? Otherwise, I'll just wrap it up. Do you only trade certain days of the week and avoid others? I don't. I didn't used to trade on Fridays. You will see me place some trades on Fridays, but as a rule, as a general rule, I don't like trading Fridays. And I don't like to talk in generalities. I like to talk in specifics. It is better if you don't trade Fridays if you're a swing trader. Because if you place a trade on a Friday, you're going to have to hold it over the weekend. Thank you, Ray. All right. Well, that's going to do it, guys. I will invite you. Just keep an eye out for the Forex boot camp, the Pro Trader boot camp that is going to be coming in. I don't have anything set up for it yet. We're putting the pieces together now. It is a very big event. I know the room is capped at 3,000 people. I physically, in talking with everybody, it is very hard to continue to project charts and do all the things that we need to do in excess of 3,000 people. Last year we were running 22 to 2,400 people a day for the whole time, and we did that every single day. So if this gets much bigger, we may have to start, restricting access, and that's something that I don't want to do. So make sure that you do get registered just as soon as the opportunity becomes available to you, because if not, I mean, if we get a ton of people registered, we're not going to allow, we just won't be able to allow everybody in, and I don't want that to happen. Hey, thank you, George. I really appreciate that. All right, guys, this is great. We've been running about 30, 40 minutes, and I appreciate you guys coming in. Questions, comments, concerns, you can always post them on Triple Threat Trading, which is where this video gets posted, as well as now at the Trading Underground. If you guys are not members of the Trading Underground, get over there. We're doing great stuff over there. We're getting great comments on everything that's happening there. TradingUnderground.com. Free site. Lots of good information. We have the fastest news feed that's available for free anywhere. It's fast, and no reloading charts. Richard says he's a proud member. Thank you, sir. All right, guys. I appreciate you. Thanks so much for being here. And until next time, good luck and good trading. I'll talk to you soon.